Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 BMO Global Metals Mining and Critical Minerals Conference in Hollywood in Florida. Gold prices are flying and companies are transacting. Joining me to discuss this is Mike Fraser, CEO of Goldfield. Mike, welcome back to Kitco.
Hi Paul, good day, good to see you.
Well, let's start off with 2024 performance. You reported your results a week or two ago, and I think it's fair to say it's a bit of a mixed bag. Production for the year was down about 10%, but you ended with a strong fourth quarter. Similarly, all-in sustaining cost was up 26% year on year at $1,629 per ounce. But again, you ended strongly, had a strong fourth quarter, all-in sustaining cost of $1,410 per ounce. You paid out slightly less in dividends last year. We're going to talk about capital allocation and shareholder returns a little bit later on, hopefully. And this, I think, shows up in your share price, which was up about 50% year on year, which sounds great until you put that into the broader context. A lot of your peers were up 100% year on year. Mike, for you, what went well last year? What was challenging?
Thanks, Paul. And look, I perfectly agree. We had a year of two halves in the way I describe it. The first half was absolutely forgettable from our point of view, really underperformed. We had some significant challenges across our portfolio. So first and foremost, I should call out our safety performance. We had 2 fatalities across our business, which was completely unacceptable from our point, and we responded very strongly within our organization to that. Secondly, I think we had challenges at Salares Norte. This was a key project for us. We were impacted by severe weather events that arrived early in Chile. We also had some weather-related impacts at Gruyere, and then we also had some challenges at South Deep. So we had a number of impacts on our production, but as you rightly said, we responded really well. And in the second half, production was up 26%, half on half. That had an impact of diluting costs, 12% down on second half, and enabled us to deliver a very strong cash flow delivery in the second half of the year, and in particularly into the fourth quarter. That then allowed us, despite the fact that we also acquired Osisko Mining at a price of $1.4 billion, to declare a record dividend, which was 10 Rand per share, and that was significantly up on the prior year. So we think we were therefore able to, despite the really difficult first half of the year, to respond really well and to actually produce into a rising gold price, which has certainly helped us.
I want to sort of dig into some of those points a little bit more, if I may, Mike, particularly the severe weather events. You're not the only company that's fallen foul of those, and because of their nature, I imagine it's very hard to predict them, it's very hard to prepare for them. But with climate change, global warming, whatever you want to call that, they're predicted to be more and more of them, or happen more frequently. A couple of months ago, the Insurance Association in London was talking about how insurers are looking at re-evaluating sort of climate-related risk, and obviously how they price their products for that. As a CEO of a multi-asset company, although with assets in various different jurisdictions and geographies, how can you incorporate weather-related risk into your planning?
Yeah, that's a great question. And I think first and foremost, our ESG strategy, a lot of that has been about it's actually getting ahead of the curve. So it's investing in renewables. It's actually creating interventions to reduce our carbon footprint, our environmental footprint. But increasingly, the work that we're doing now is around climate risk mitigation. So very practical things. So, for example, post the Gruyere event that we experienced in the beginning of 24 in Australia, what we've now done is we've increased our carrying capacity of consumables, of fuel, so that if we have a significant weather event, you're not going to stock out during periods like that. Equally, what we are also doing is recognizing that the old way of planning is just expecting every asset to perform to their potential is not always going to be the reality. So when you think about developing guidance, develop in a very scientific way, which also takes a probabilistic view on the fact that when you've got a multi-asset business, that you're going to have some assets that could be impacted from time to time. So actually acknowledging that in how you plan for performance. And I think that's increasingly going to become an important part of how we think about planning and executing our business model.
That's interesting, because every company puts out their annual guidance range. Do you see a day when companies put out their annual guidance range and then put on a plus or minus 5 or 10%, depending on whether there is a weather-related event?
No, I think that's what management are there for, is to actually really try and get ahead. And as you quite rightly say, some of these are unpredictable events, but what we've got to try and do is to build a system that is able to try and mitigate as much of that impact as possible. And when you do plan, try and take an acknowledgement of the fact that when you've got 10 assets across the world, on a year-to-year basis, it's likely that one of them may be impacted by an event like that, and build it into your planning structures and planning systems. So I think that would probably feel like a cop-out the day that we get to a point and say, well, this is what the plan is, but we're not going to accept any liability if we miss it due to weather events.
Okay. Now, we're obviously sitting here in Florida in the United States, and as weather events continue to increase in intensity, for example, here in Florida, sea level rise is obviously a key one. In other parts of the country, it's wildfires. We saw that earlier this year in California. Some of the results of that for normal everyday people and their households is insurers refusing to insure assets. Is there a similar situation in terms of mining assets where if you're located in an area where insurers deem to be at exceptional risk to climate-related events that you're not going to be able to get insurance?
Look, I think what you've already seen is insurers like flexing their muscles, particularly around some industries that are deemed to be higher risk. Certainly what we haven't experienced, we have a very good risk management system in our business, and I think for companies that continue to hold a high standard on risk management, I think they will be insurable. But I think there is going to increasingly be a divide between those that insurers look to as having a higher level of risk because their inherent processes to manage variability through natural weather events is not there. So I think insurers will flex their muscles, but clearly for us, it's really about making sure that our risk management processes are robust enough that we can manage the impacts and manage the variability that some of these events bring, and work in partnership with insurers so that insurers can build that trust to say that we are a company that they're willing to support and stand behind.
Okay, risks are obviously very important, so I'm glad we've been able to touch on that, but let's talk about hopefully some more fun things. You've got a couple of big projects on the go at the moment, Salares Norte in Chile, which you've already mentioned, and also, of course, Windfall in Quebec. Let's start with Salares Norte in Chile, where production is ramping up. What will 2025 see at Salares Norte?
So 2025 is an important year. It is still a ramp-up year. We're expecting to deliver between 320 and 350,000 ounces out of Salares this year. This is against a production of 45,000 ounces last year, most of which was delivered in the fourth quarter. And so it's an important year for us. We've started the year well. We've done significant work in preparing for winter. The winter conditions are pretty harsh there. It's at 4,500 meters above sea level. We have significant weather events passing through us. And so the real work for us, it's not about the design of the plant. We know that the plant can produce gold, it's effective in doing that. It's really getting that operating practice right so that when the weather events come through, we respond well and we ramp up back quickly thereafter. And so that's been the real focus for the team. We've got a great team in place this year, but it's the first year that they're really going to be tested on a significant ramp up. But we're confident it's going to be a really good year for us. And Salares is a great project for us. Comes in at a very low cost. These kind of gold prices, we're generating significant cash out of that business. And so we're really excited for what that holds for us.
Okay, and thank you. You mentioned earlier on in our conversation about Windfall, which you acquired from a Cisco. That's a development stage project. What's the plan there? What's the sort of capital deployment, the capital allocation at Windfall this year?
Yeah, great. And that's another really important project. So that's the project that comes after Salares. So this is a ramp-up year for Salares. We see Salares at running at a close to nameplate capacity in 2026. For Windfall this year, we're really preparing for a final investment decision by our board in quarter one of 2026. That's our plan. It allows us for 2 years of construction within a ramp up into 2028. And so that really fits quite nicely in our overall profile of improving our portfolio. This year, it's quite a big year. We're spending around $400 million Canadian in Windfall this year. And that money is going into a number of areas. We're doing a lot of work on surface infrastructure, water treatment plants, tailings, impoundment dams, the camp. We're doing additional work on our underground mine development, and we're also doing significant work on preparing for project execution by building out a project team, doing detailed additional engineering works, and really ordering some of those long lead time items that prepare ourselves. In addition, we are progressing the final environmental approvals, and also our engagement with the host communities around the IBA, which is also supportive and required ahead of executing the project.
Okay, now let's stick on the theme of capital allocation. As you mentioned, you paid a record dividend, I think you said 10 Rand per share. Okay, we're at an investor conference. What are you sort of hearing from investors about capital allocation, specifically returns to shareholders? A number of companies have generated a lot of cash last year. Returns to shareholders are increasing, although most of that seems to be dedicated towards share buybacks rather than increasing dividends. What are investors telling you?
Yeah, look, a really good question. And I'd firstly say that, besides the fact that it was a record dividend that we paid out nearly 80% of our free cash flow to shareholders, and that we believe is a significant contribution and demonstrates our commitment to providing returns to shareholders. But I think the one thing when we think about capital allocation, we've got a very clear capital allocation framework. I think first and foremost, our objective is that we want to maintain safe and reliable operations, so we continue to invest in safe and reliable operations. Secondly, we ensure that we retain an investment-grade credit rating, because that ensures that we build that trust on our investors that we're going to have a sustainable business into the future. Thirdly, we pay a base dividend. Today, that's between 30 and 45% of underlying earnings, which means shareholders benefit from rising prices because the earnings are correlated to higher gold prices. And then finally, any free cash flow beyond that needs to compete. And we compete based on returns, on either increasing returns to shareholders or investing in the business. And typically, is a tension between both of those. And ideally, what you want to do is demonstrate that you're both investing for the future as well as providing higher returns to shareholders. Because as we're seeing with investors is that there's a lot more generalists coming into the sector. And it's not just about chasing the higher prices that are achieved gold stock prices due to higher gold prices, but equally on the belief that there's going to be some higher returns due to shareholders. So we're very mindful of the fact that success is going to come by holding that tension of thinking about the long term, investing in the long term, as well as providing higher returns to shareholders during this time. And it's not a perfect science, but it's actually holding that tension between the two. And it's building that trust with our shareholders and investors and future investors that we're a company that it's going to act reasonably predictably in managing those decision points.
I think that's quite interesting, Mike, because that's a noticeably different approach to most gold companies. Most gold companies pay a fixed quarterly dividend, whether it's 4 cents, 10 cents, whatever it is per share, rather than as you do, a percentage of, let's say, free cash flow. And I would posit that people that invest in gold companies want exposure to the gold price appreciation, and so would perhaps be more interested in a dividend policy that's based on, let's say, a percentage of free cash flow. So yes, there will be variable dividends quarter on quarter, but they get that exposure that arguably they're looking for.
Absolutely, and I think one thing I've known about this conversation, and it's really fortunate that we're having a conversation about how we provide additional returns. It wasn't too long ago that we weren't having this debate. But what is clear is that there are many, many different views around there. And I think for us what's important is that we act consistently and that our investors and future investors can look at us and say, this is a company that's been predictable in how it actually allocates free cash and surplus returns. So that, I think, is probably the most fundamentally important point, rather than what is your underlying policy.
Another aspect investors are obviously very interested in is balance sheet. So let's talk a little bit about that. Goldfield ended the year with $860 million in cash, the most since, I think, the end of 2020, the highest level since 2020, and about $1.8 billion in debt. What's your plan for the balance sheet this year? How do you want it to look by the end of 2025?
Look, I think there's a couple of things. First and foremost, we believe that our net debt levels of, on average 1 times net debt to EBITDA through the cycle. That's kind of roughly where we want to average out. Sometimes we may be lower, other times we may be slightly higher. What we were able to achieve is a net debt to EBITDA level of 0.73 at the end of December, and that was despite spending $1.4 billion on acquiring a Cisco Mining. In these kind of gold prices, we actually see a deleveraging effect quite quickly. And that's despite the fact, with the 10 Rand per share, we're going to pay over $400 million in dividends next month to shareholders. So that's going to be a significant outflow. But we know with gold prices, we are going to delever quite quickly. But equally, we want to create some kind of balance sheet flexibility so that when opportunities do arise, we can act on them. We have a very simple strategy, is that we want to increasingly improve the quality of our portfolio. We do that through brownfields exploration, greenfield exploration, and from time to time we'll do bolt-on acquisitions. So you want to be in the position where you can act pretty quickly and flexibly when that arises. So having a good, sound balance sheet is important to us.
Now, Goldfield's completed a big M&A transaction last year with a Canadian focus, Windfall obviously, and on Sunday, just as this event was getting underway, another was announced, Equinox and Calibre getting together. That had a big Canadian focus as well, bringing 2 mine development stage mines or early production mines coming together. Why do you think Canada is attracting so many M&A deals?
Look, I think firstly, Canada is a world-renowned destination for mining. In particular, Quebec, where we are, it's one of the top mining jurisdictions with very good regulations, high-quality people, and a very good understanding and support amongst communities for mining. So you bring those 3 things together, it's just an attractive place. It's got stable investment destination. So we feel like it's a really great place, and we feel very blessed to have an asset like Windfall in our portfolio, and we think it's going to underpin our business for decades to come.
Now, we're here at BMO. It's where the industry gets together. You're meeting with shareholders. There's a lot of sort of corporate activity as well. Big companies meeting smaller companies, vice versa. With the metals prices so buoyant, you can see there's a divergence in the valuations between the big producers such as yourself and the smaller companies and the non-producing companies. That presumably gives you great leverage to potentially do more deals. You mentioned you're looking to grow as well, or continue growing. What kind of things are you looking at? What kind of things are you considering?
Yeah, Paul, and that's a really interesting question. And if you think about why there's a disconnect between large producers and smaller producers in terms of relative valuation, it really comes down to perception of risk, because generally larger producers can be more predictable in how we actually deliver a replacement. And I don't talk about growth, I talk about replacement of reserves. Our strategy on growth is not growing ounces per se, but growing cash flow per share or relative margin per share. And that's how you grow the value of the company. It's not about the number of the ounces that you produce per se. But when you look at the sector, there are deep opportunities for further consolidation, for creating value by bringing on board advanced development projects which are trading at valuations much lower to what ours are. So we will continue to look at that, but we're not driven by a desire to go and do a number of deals. But we will be very sequenced in our thinking about, we will look at a number of opportunities, and when the right one makes sense to us, we will add those on an incremental basis to the portfolio. But I don't think you should see Goldfields as a serial deal maker per se, but we will see that as part of our strategy to improve our portfolio incrementally over time.
Okay, Mike, let's end with some forward-looking statements, if I may. With the start of 2025, what are some of the milestones people can expect to see from Goldfields this year?
Look, for Goldfields, we've got a couple of very simple objectives for us. First and foremost, we're going to advance our safety journey to keep people safe and at work. Secondly, we're going to deliver our base operating plan, so everyone is very clear about what's required for them to deliver on this year. Thirdly, we want to deliver safely and reliably the ramp up at Salares. Fourthly, we want to advance the Windfall project, getting it into a state where we can make an investment decision early in 2026. And lastly, we want to continue our journey on our ESG commitments across decarbonisation, gender, improving our gender balance in our business, and our environmental commitments.
Well, I wish you all the best with those objectives. Mike Fraser, thank you very much for joining us today.
Thank you very much, Paul.
And we have a lot more to come from the 2025 BMO Global Metals Mining and Critical Minerals Conference here in Hollywood in Florida. So hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining special coverage of BMO's Global Metals, Mining and Critical Minerals is brought to you by First Majestic Silver.